Welcome back to Squawk Box. Uber beating on the top and bottom line this morning with mobility and delivery revenue topping estimates and the number of trips higher than expected. You can see what's happened to the stock just on the back of that news, up about 7.5% right now. Joining us to talk about it first on CNBC is Uber CEO Dara Khosrowshahi. It's great to see you, sir.
Great to be here.
And I'm sure great to see you on a day when you have some pretty great news to report. Let's sort of break down what you're seeing, and then I want to sort of break down what's happening to the extent that you are seeing a larger economy. And we've been talking about the SOTU address last night and also what Fed Chair Jay Powell was saying about inflation. The mobility number was I think, a lot higher than people were expecting. And then similarly on the food side, how do you see that breakdown right now?
Well, we're seeing strength across the board. I think what's happening with Uber is that during the pandemic, you saw a huge shift of spend to retail. And now coming out of the pandemic, you're seeing shift come out of retail into services. And by the way, that shift is not over. We're not back to pre-pandemic levels in terms of spend on services. So what that translates into for us is record audience, 131 million monthly actives on the platform, up 11% year on year. Record trips, 2.1 billion trips this quarter. That's almost 1 million Uber trips or deliveries every single hour. And that was up 19%. And also record gross bookings, $30.7 billion.
Are you seeing anything about the strength of the consumer, though? Because there's been lots of questions about how strong the consumer is, whether they'll trade down. You're seeing folks trade down, if you will, in other parts of the economy. Are they doing it in Uberland?
We have looked and looked, Andrew, because we want to think about not where the business is today, but where's it going to be 6 months from now? Where's it going to be a year or 3 years from now? And we're not seeing any signs of consumer weakness at this point. Now, we may be benefiting from the shift of retail spend to services spend, but we've looked at different consumer demos based on where they live, et cetera. We've looked at Eats orders are more eaters going to 2-star or 1-star restaurants, and we're seeing no signs at all of consumer spend weakness. Now, when we talk to our earners, about 70% of drivers who are signing on, and the number of drivers signing on is up 34% year on year, very healthy. They're saying that inflation is a factor in their decision to come onto our platform so that they can earn more. So we may be benefiting from that trend. We'll see where it takes us. But right now, everything looks green.
One of the items that looks great, at least at the moment, is some of your investments, which were actually written up. I'm thinking of Didi and Grab. Long term or even short term, what is your sense of when you might exit those investments and what that exit might look like?
Well, Didi is a great company, and it's a significant stake for us, but we plan to exit that stake over time. Now, the good news for us is we're strongly free cash flow positive for the year, and we will be free cash flow positive for the foreseeable future. So we can take our time and sell down our Didi stake when the time is right.
So there's not going to be some morning that we're going to wake up and you're out of the stake. You think it's something where you sell in tranches?
We haven't determined how we're going to sell or when we're going to sell, et cetera, but we can take our time and maximize value for our shareholders. But we're not looking to be an investment manager one way or the other.